This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Sunday, July 24th, 2022. This is a weekend video update for the Greenville Eastside IBD meetup group and the Stockyard meetup group for Canslim growth stock investors. I'm getting this one out a little bit late this weekend because we're out of town, but there's a good bit of stuff going on with the market, so we will run through things quickly this weekend. As always, educational purposes only, not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. So we'll look at the M factor, talk about what we saw this past week. Was it constructive action or destructive action? It was a sort of the best of times for the indexes and the worst of times for our traditional growth stocks, other than the beaten down former leaders. Follow through day is still off to a slow start with some weak signs, although we did get some subsequent follow through days. And then we'll look at the monthly meetings real quickly. So the M factor, as always, this is the most important letter in Canslim. O'Neill teaches us to look at three things: action of leading stocks. Again, we're seeing less and less proper setups, and we're seeing the breakout struggling. Actions of stocks owned, still slowly wading back in the group teaching portfolio, and still seeing a lot of whack-a-mole with any breakouts or signs of strength on leading growth stocks. Then we'll look at the market pulse, distribution day count, price and volume on the indexes, and color and book tracking. So let's get out of here and go over to MarketSmith real quickly. Here's the daily NASDAQ. Constructive wise, again, index was strong this week, came back above all three moving average lines, including the 50 finally. So we'll see if it can hold that. Had this distribution day on Friday, which was the outside reversal day, so that's a little bit ugly, but had, two good days on volume in there and even a third day up. So a little bit of improvement on the S&P 500. See the same thing back above all three moving average lines. Let's see if that can hold. NYSE has not retaken the 50 yet, so that's the sort of redheaded stepchild right now. Dow came back above all three moving averages. Russell again came through all three, so we need these 50s to curl up, need to get back up to these 200 days. And then the S&P 600, similar to the Russell. So back above three of the moving averages with the 50-day trying to curl up. And if we go over and look at the coloring book, on the constructive side, we had the subsequent follow-through days on the NASDAQ this week, so that was good. Market school exposure was ramping up, got up as high as 4. Still had, some distribution selling days and wrapped up the week with the distribution day on the NASDAQ. Still only have 7 buying days, 11 selling days in the 25-day window. And of course, this week we have massive earnings coming as well as the Fed meeting. And then if we look at the group teaching portfolio, still just right at 25, 26% invested, down 12.7% for the year still, full position in Halo, half position in TAN, and then just a little pilot, test proof of concept position and the put options on ARC Genomics, which is the most speculative of all the ARC funds, I think. So just a little there, so we'll see what happens with that. So let's go back over here. We covered all that. Still kind of a whipsaw market. Strong opens often fade, have up days on weak volume. Setups, like I mentioned, we're not seeing many strong ones still, and the ones that do, we're not making much progress. And if we look at the breakout since the last follow-through days, the follow-through days were on that Friday, June 24th. So here we are, we're a month later. And what Cell H broke out, Funco and EVH broke out. They both failed. Halo broke out, it pulled back. CFLD, I think, was doing okay. CCRN, last weekend, I noted it was an early entry and it was thin, and it got whacked this week. Too thin for me, under $20 million per day. And then a week ago, Friday, OPCH broke out. And then the only thing that broke out this week was LNTH, and then it's struggling to make progress. So, considering the follow-through day was a month ago, this is not very many breakouts and not a lot of setups waiting in the wings. So I still go with these road signs: slow, proceed with caution, potential speed bumps ahead. This week will tell us a lot. And I still go with some red. Group teaching portfolio, just kind of staying at that 25% invested range until those entries start making progress and or see some really, really good setups, maybe viable gap up in a super strong Canslim stock. So, not time to step out into that road yet, and just seeing red lights also. So the indexes are fine, growth stocks are not. Why is this? One, I never know why exactly, but so maybe what we're seeing is short covering and some bottom bounces due to, the buy the dippers haven't been totally wiped out yet. So people still going back to these old names, NVIDIA, whatever, Teladoc, whatever it happens to be, instead of looking for new names, which are the ones that are going to lead the next wave up. So we'll see. And then, one big question I have, I kind of talked about this on Twitter. Why has QT not started? I feel like I'm in an episode of The Fed Has No Clothes, sort of like the Emperor Has No Clothes, because what they told us they were going to do, the Fed said that quantitative tightening was going to start June 1st. It's in their minutes. There are specific instructions to the Fed desk on what to do. It's supposed to be a $30 billion per month reduction in the balance sheet and $17.5 billion reduction in mortgage-backed securities. These are per month for 3 months, June, July, and August. And then in September, they said we're doubling all these numbers per month. It's going to be $95 billion per month. And the way this happens is that as instruments expire, they're not supposed to reinvest until they've gotten 30 billion back here and 17.5 billion back in mortgage-backed securities. So those are caps, and only when those caps come in should the numbers go up again, but it should be an overall net reduction of this much per month, and then it's going to double in September. But in reality, looking at the Fed data on the Fed websites, they are doing a net of nothing so far, and we only have 1 week left in July. So we should have, 2 months adds up to the 95 billion, and they've done a net of nothing. Everything's increased a little bit. So here's just a little spreadsheet where I had been tracking the data. So here is June. So here the balance sheet is the top rows, mortgage-backed security are these rows. So while you had some big weeks where there were some big cuts, on a net monthly basis, there were increases the other weeks. So for all of June, the balance sheet went down almost 1.5 billion, but mortgage-backed securities went up 1.8 billion. So it was a net increase overall of 385 million instead of a cut of 47.5 billion. That's a pretty big miss. They're like 885 billion off, or 47.8 billion off. And then in July, again, started out the first week with a big week cut on the balance sheet, but it's gone up the other weeks. So the net decrease in the balance sheet was 14.3 billion through 3 weeks, but mortgage-backed securities went up big time last week also. So it's up 16.9. So the net of these two for the whole month of July is overall everything's up another $2.5 billion. So the cumulative total through the first 7 weeks of quote QT, which is apparently being done on the QT, is $2.97 billion when we're supposed to be down $95 billion by the end of July. So Maybe these big whacks are coming in 1 week, who knows? But the data comes out into the day on Thursdays every week as of Wednesday of that week. So it just takes 1 day to get the data out. So I'll be looking this Thursday, but so far QT is just a figment of the Fed's imagination as best I can tell. And if I'm wrong, somebody let me know, but I pulled the data off of their websites. So a little bit curious there. All right, so let's go back over here. We'll see what happens. So our monthly classes, our next regular educational monthly meetings, Tuesday, August 16th, 2022. These are all online. You register at the Stockyard Meetup site. Tuition is $12. They're recorded. Everybody gets a recording, slide deck, and I send out links to any webinars, articles, resources that I talk about in the post meeting email. And if you're a first timer, I send you the prior month's meeting, all the links as a courtesy. And then the prior meetings are available. These are $15 each. Spent 3 months teaching how to write a set of written sell rules for Canslim investors. So those can be ordered. Spent 2 weekends at the end of 2 months dealing with a complete weekend routine. Talked about when you can hold through earnings season. So you can see those. You can email me. I can send you the whole list with ordering instructions. You can follow me on Twitter, and of course, like and follow on the Stockyard YouTube page where you are now. So hope you had a great weekend routine. Big week coming up between the Fed and earnings. Earnings season's often a catalyst for moving the market one way or another. Add in the Fed. This week should give us some information as we look day by day at each of the 5 cards that the market's going to show us this week. So that's it. Hope you have a great week. Try to get next weekend's video out a little bit sooner. And again, just keep studying hard. A lot more study time than doing time right now. I'm out of here.